Welcome back. There's not any recovery in sight as far as the market is concerned. Continues to be fairly muted, but within that, there are pockets of outperformance. Jyoti Labs, which was actually fairly quiet to begin the day when rest of the FMCG pack was doing quite well, has actually now shot up to the day's highest point, 8.5% on that one. CG Power, which is the result reaction, is higher by 7%. And even Westlife Development ahead of its earnings is fairly excited. In fact, talking about ahead of earnings, take a look at SRF and JSW Energy. Both come out with numbers today. And ahead of that, there's a definite weakness. Of course, SRF has the added pressure of US, tweaking the ADD on a couple of products. But other than that, both SRF and JSW Energy are on the lower side. And Paytm continues to trend lower. After that resignation that happened over the weekend of the CEO, that stock hasn't really managed to recover. Yesterday, it was down. Today as well, it continues to be under pressure. Deven Choksey joins us on the show now. Deven, let's begin by discussing this new age tech vertical itself that we used to talk a lot more about and a lot more often rather than what we have seen of late. The likes of Zomato, Nykaa, PB Fintech, Paytm for that instance. What within that looks like an attractive bet right now after the kind of price moves that we have seen?
Good afternoon, Nisha. Well, I don't think that immediately any of these names become very appealing and attracting to me. Largely because of the few facts. Leave aside Paytm for a while now, because the underlying business model has to get re-established before we can if you want Paytm. However, when you look at particularly the Zomato, this company is showing some amount of better approach in form of collecting revenue and in turn becoming more profitable. So everything else at this point of time is fully priced in, and the way in which the valuations are currently, if you do not perform well, probably you will get the punishment. That is a kind of a caution that one will have to follow in this case. So till the point of time you have, the elevated valuation, that comfort level will not come. Business models are passing through significant amount of, reinvention in many cases. Unless you have a very solid underlying backend model, probably the disruption cannot continue the way it started with. So from that perspective, if you ask me, I would not probably chase any of these companies, for the valuation at which they are commanding currently.
Industrials, Deven, yesterday we had seen that Bank of America upgrade coming in on the likes of ABB, Siemens. Today, Morgan Stanley is talking about Titagar wagons and railways as a big theme to watch out for. And then, of course, L&T will be in focus with respect to earnings and the various segments it's present in. Within industrials, what's your top bet?
Yeah, well, I think all these companies are definitely having some fantastic time going forward as well, largely because of the visibility has expanded significantly. Like the case of L&T, they have a visibility of at least 2.5, 3 years kind of a order book for execution. Similarly, the situation is extremely buoyant for the likes of ABB, Siemens, all those companies where basically the capital goods segment power play is going on currently. So from a perspective of business situation, these are companies which are very favorably placed. However, when it comes to investing in the market at this point of time, I believe that unless market gives some correction, the buying probably will take a longer time to give it the return if you end up buying at the current levels. So because of the fact that the valuations are already fully pricing in FY26 earnings per se. To a greater extent, I would like to buy, but the fact remains that when the market gives some correction and opportunity, it would be a better time to buy for the margin of safety.
Let me also take it across to Sharad and find out what the dealing room chatter is this afternoon that he's picking up and what are the stocks being talked about. Sharad?
Well, yes, what we are gathering from the dealers is that a DI selling is happening over the last 1 week for Angel One. It stated that a large PMS might be paring its stake in the company as well, and the stock itself is down 8% over the last 4 trading sessions. Importantly, the key DIs invested in the company include Nippon Mutual Fund, Canara Robeco Mutual Fund, to name. And also, the stock had its 52-week high levels at 3,900 rupees a share. So after that, there has been a significant correction. And also, fundamentally speaking, around a week ago, the numbers had come. The client acquisition growth, that has slowed down for the 4th straight month when it comes to Angel One. Now, the street has also expecting that there might be an overhang as the company is going into new verticals, especially the tech-heavy verticals, and that may actually weigh in on the margins. And also, Street is factoring in higher ad spends also as well.
Thanks, Sharath, for that. But Naresh, wanted your view on a couple of these stocks which are coming under pressure. Voltas, the company reports numbers today. And I remember that at the end of Q4, they had come out with that big announcement of having 72% jump in volumes on a year-on-year basis. But the stock ahead of the Q4 numbers is fairly muted. And the other one is Mahanagar Gas. That one too is down about 5%. Anything on the charts that you would want to flag out?
Would be interesting around 1300, 1350. That's the price point where it topped out back in 2022. So that should act as a support. That was also a gap up move very recently after that announcement. So that should hold. So closer to 1350 is where you want to buy. MGL is something which is a total avoid. We've not seen any clear trend across the gas spaces as such. For now, there have been many false starts. So avoiding the whole gas sector, specifically MGL, IGL as such.
Okay, that's the view coming in on some of the gas companies. In the meantime, just taking stock of what else has been happening. Lupin, of course, is down and has cracked after its numbers quite a fair bit. It's down about 6.25%. There's Oro Pharma also, which is lower by about 4.5% as we speak right now. Deven, I don't know how closely you've been tracking the pharma earnings, but anything that stood out anywhere where you would be tempted to add positions or buy afresh?
Is playing out for us that those companies which are having the complex generics and the specialty product manufacturing, they have been relatively reporting better numbers. Be it case of Lupin, which you probably saw today. I think the company is now remaining quite upbeat about the new products and its contribution going forward in the next 2 to 3 years as well, with a higher margin. Similarly, the situation with likes of Sun. And I would think that even DRL and Cipla could be similarly, well positioned in this entire space. Maybe our markets are currently reacting to the valuations. That's where probably some amount of negative other readings are seen. But to my mind, these companies are looking very well set from the perspective of higher amount of growth. Even the likes of DVs and Laurus, who have been struggling for last 2 years or 2.5 years, they are possibly showing relatively better signs of resuming their CAMS business and the APIs to the select customers that they are working with. So to my mind, the worst seems to be over in their case also. Of course, business numbers would further validate going forward in subsequent quarters. But to our understanding, the worst is behind them. And probably things should be looking relatively better for the likes of DVs, likes of others going forward.
In fact, talking in because much of the rural recovery, which now seems pretty evident and not just, for two-wheelers, we've heard the same commentary from FMCG as well. But is the best already baked into the prices for both Hero MotoCorp, the way it's shaped up this year, and TVS Motors, how it's been for the last entire 1 year?
Yeah, most of it, as you rightly said, is in price. Clearly the moat, is with Bajaj, as I see it in the two-wheeler space particularly. Because of the kind of models that they are talking of launching, they give the visibility of not only taking away some amount of market share from the competitors, but also the fact that the volume growth will be on a higher side because of the early start with the new models that they are talking about. At the same time, their margin equity business. So certainly, the premiumization function, our process is running well for Bajaj in this case. So if at all one has to probably, be looking at more convincingly about, the two-wheeler space per se, in my viewpoint, it should be Bajaj first to begin with and then TVS thereafter.
Right. Okay. Let's get in some BTST trades as well going. While SRF hasn't seen much of a recovery, in trade after its numbers. But Kunal, what about some BTST ideas if you may have?
So I'll go with a buy on an IT name, large cap IT stock, Wipro for, the stock is looking like more of a breakout candidate. For the first time, in the last 3 months, the stock is about to close above its 20-day moving average. So this could be a possible turn of events for the stock over the near term. So it's less to buy with target of 500. Stop loss could be kept at 444. And Jubilant Food is something which I recommended in the morning. Did pretty well so far. The stock had come back towards the 495 to 500 zone. So at current levels, traders could look at a fresh buy. Targets revised on the upside to 520, stop loss trade to 464.
Right. Okay. And Naresh, what about your BTST ideas?
First is a buy on ICICI Bank, stop loss at 1120, target price of 1160. Second is a buy on Chambal Fertilizer, which has seen a good 10% correction from the top back to the breakout point. Stop loss at 383, target price of 400.
Those are the top recommendations coming in from our chartists at this point of time. Just wanted to look at a couple of other big buzzers in the trading session as well. You, of course, have on the losing side names like Rainbow Children, Just Dial, Chennai Petro. They are coming under pressure. While in terms of the other updates, of course, you have FMCG that continues to gain ground. There are important flashes at the bottom of your screen on Concor, wherein Morgan Stanley has actually upgraded the stock to an equal weight from an underweight. So it is a upgrade coming in of sorts, and the target price has been hiked materially, 1,076 versus 729, and that's because the rail freight market is expected to improve quite a bit. Quickly, Kunal, a word on Concor if you track this one, and would you be a buyer in this name?
Well, yeah, I think at current levels of 995,000 approximately, the stock looks to be attractive. It's come back towards a two-day mean reversion from 1,075. So a 7 to 8% correction into the stock price, still trading above the 50-day moving average, would be a buyer at these levels.
Okay, in fact, Titagarh as well is the other stock that I want to bring up for you on your screens, because that also started off the day pretty well. Morgan Stanley initiated an overweight stance, a target price of 1285 on this particular stock, saying that they see strong evidence of a revival when it comes to the Indian Railways, and they believe that Titagarh is also a large beneficiary of that. The stock is holding out very well today, almost a 5% uptick in an otherwise weak market, across market caps, that is, both large caps as well as mid and small. So that's looking pretty good in trade right now. But even separately, what I want to talk about is some of these new IPOs. Indegene, which is currently on. Next is going to be Aadhar Housing as well. Have you taken a look at any of these?
These are coming up with a little interesting proposition. Indegene in particular, I think, is basically, I think, as I would call it, as a complete service provider to the pharmaceutical segment in the business. So I think basically, I think this company is having a predominantly larger amount of position, as I see it, in the books of many of the pharma companies, because of their ability to provide the services, I think, in different areas of including R&D part of the activities. Looks promising, though I'm not too sure about, I think, the valuation. Market definitely is wanting to give premium. But as I see it, I think I would probably like to buy when the valuations are not so expensive with the margin of safety. Similarly, for Aadhar, the micro housing finance company, per se, I think remains absolutely promising given the kind of a rural housing activity which is happening in the country. So certainly, I think they underwrite those housing assets which are basically supported by the government schemes. And as a result of which, I think they should be working relatively stable as far as I think their business outlook is concerned. Maybe on a larger number of customer base, I think they will be generating relatively smaller number of revenue. But overall, I think the model looks relatively stable as I see it. As long as they manage to get the funds at which are competitive cost, I think they should be getting a fairly good valuation also.
Very good valuation, but since we're talking about the primary market, the other one that might hit the street very soon is, of course, Godigit. That's what my colleague Anurag is picking up from his sources. Let me take it across to him to get more details on the story. Hi, Anurag.
After multiple delays, now Godigit General Insurance is all set to launch their IPO on 15th of May as per our sources, and the price band for the IPO will be announced on 10th May. So total IPO size will be of 1500 crore, in which 1250 crore will be fresh issue and around 11 crore equity share will be offered by existing shareholders and promoters under the offer for sale route. So Godigit is primarily into motor insurance, health insurance and property insurance, and the proceeds from this IPO will be used by company for the further growth to enhance their solvency as per the details we have got. So Godigit is a general insurance company promoted by Prem Vatsa of Fairfax Group and insurance veteran Kamesh Goyal. Anushka Sharma and cricketer Virat Kohli are also investor in the Godigit General Insurance.
Right, quite a lot of new paper slated to hit the markets. But what is happening with the market right now? No recovery in sight, a little bit definitely off from the lows of the day. ITC, Unilever, Nestle, they continue to put on more and more weight. Similar is the case with the Godrej Consumer and Marico, which is now almost 10% higher. Unilever is now scaling higher in excess of 5%, and that's the case with Dabur as well. I don't know why Jubilant Foodworks is also seeing an uptick along with them. But other than that, Kotak has seen a bit of a recovery, and to be fair, it was largely sort of languishing for the better part of today's trading session. That spiked up to the session highs right now, but the rest of the market hasn't seen any meaningful move. Kunal, is the worst behind for Kotak Bank though on the charts?
Yeah, looks like. I think after that 3 days of very sharp sell-off, and the stock, I think on a single day first corrected by more than 10%, and then the subsequent next 2 days the stock had fallen by another 4 to 5%, closer to 1530, 1540 approximately is where the stock had made a low. And in that 1 week of sell-off broadly, the stock had formed a triple RSI divergence where for 3 consecutive points on the price charts, the stock was making new lows for itself, even though by a thin margin as compared to the previous leg of correction for the stock. And on all of those 3 occasions, the RSI was slightly higher for the stock, which means that a near-term bottom could be in place for the stock price. But the bigger concern is that if in case the markets get into a second phase of a correction, so we've already seen from 22,800 approximately, the Nifty coming back to that 22,300 odd mark. But if there's another round of correction for the indices, then I would probably believe that Kotak Bank and many of the other private sector banks can also go into that mean reversion phase. So not too much bullish into the stock price as of now, but would wait out for dips to try and go for a contra buy.
Right, okay, that's the take coming in on Kotak Mahindra Bank. Deven, just as a market strategy, given the heightened volatility of late, what is it that you're doing? Just sitting on the sidelines, or are you still scouting for opportunities or buying anything afresh or adding positions to perhaps?
Well, I think certainly the market gives you correction of a sharper degree in individual stocks. I think definitely one will have to look around for a good amount of buying opportunity. Of late, I think for the last 5-6 months, I think we haven't been participating aggressively by buying into the new stocks. And probably I think this correction, if it is resulting into sharper degree of correction with the price, I would think that I think it should be a buy opportunity in some of the good names like Tata Technology, I think which has done I think a good listed market entry, but with a significant premium. Such kind of companies, when they start getting available at a compelling valuation, I think they could become a buy opportunity. And similarly, some of the frontline companies where the fundamental strength is extremely strong, the likes of Reliance, likes of Tata Power, Tata Motors, those kind of companies, when the correction happens, I think it is a buy opportunity.
Okay, on that note, Deven, we let you go. Thanks so much for making time and speaking with us. Just quickly wanted to flag out the SRF commentary